Excellent. So yeah, it just went.
Okay,
There we go. Okay, outstanding.
you have the floor.
Appreciate that. Thank you so much for inviting me today, and no worries with running over. But today we're going to talk about trading the S&P E-mini futures, and I'm sure there's a lot of chat rooms out there that talk about this. We have kind of a unique approach, and so let's go ahead and get started. Today we're going to learn how to trade the S&P E-mini futures, and yes, we are scalpers, and I know a lot of people don't like that word. We're in and out relatively quickly, but what I do want to show you is, I have a little bit of screen issues here. Hold on a second, please. What is going on? There we go. Okay, so again, I want to thank Trader Talk Live for inviting me along. TraderShark.com is where you can learn a little bit more about us. Today's presentation is going to be Green Dot, Green Candle, Go. I know it sounds overly simplified. Trading the equity markets, options, stocks, futures, there's nothing easy about it, but we've tried to take a complicated market and make it something at least that the average person can follow. So just common disclaimer, you want to know that trading futures, options, and futures off exchange foreign currency transactions, you can lose a lot of money and you can make a lot of money, but just understand that consult your financial advisor before you put any money into the market, no matter what you're trading out there. Past performance is not an indication of future results. What are we going to learn today? I know I'm talking a little bit fast because I got a few minutes short. We're going to evaluate pre-market conditions. We're going to go ahead and stay on the right side of the market. I'm going to show you how to do that. And also key support and resistance levels. This is really the most important part of any type of trading because as our previous presenter had indicated, we don't know where the inside traders are trading. So key support and resistance levels, I'm going to show you how to calculate those. Think before you click. There are traders that are hyper traders want to be trading 300 times a day. And I think that you could trade instead of 300 times, 3 to 4 times a day. We're going to use commonly used indicators inexpensively. You don't need to pay $3,000 and $4,000 for proprietary indicators. It's just not necessary. So that's who I am. Yeah, I'm a little bit older than that now. I am 56 years old. I've been trading for over 30 years, stocks, options, Forex, and futures markets. I was a mortgage broker for 20 years, and I was a former U.S. Army officer. I'm not going to go into a whole lot of the fluff that you'll hear a lot of people go about. I'm not a big salesperson. We got a lot of meat and potatoes ahead of us. So I am talking a little bit faster. I'll try to slow down. I'm originally from Western New York, a country boy, not a city dweller. I was a medevac helicopter pilot, so that means anybody can fly. If I can fly, anybody can fly. And I am a trained professional life coach. A lot of people out there will say that they're coaches. They'll just call themselves coaches. I was actually trained by the best of the best. And if you come join us in the Shark Den on the free trial on Tuesday, the 14th, I will tell you who that was. In the meantime, what's our objective? To create a core group of like-minded traders helping traders. We love to have contributions in the room. You'll never hear a harsh word come out of my voice. There's too many questions. There's no such thing. We were all on that side of the screen at one time. We're going to apply commonly used indicators to trading the futures market. And if you want to ask about a futures, let's get on a Skype call and we'll talk about it. But we do it inexpensively. Not going to cost you a whole lot of money. We're going to help reduce one of the biggest injuries that most traders face, and that's over trading, right? Because I can make as much money in 3 to 5 trades a day as somebody who's trading 300 times a day on a little niche that they see in the market, and I know people that do that. Your commissions will chew you up, right? To slow down and think before you click, it's important. We can sit there sometimes for 15 minutes, an hour, maybe even an hour and 45 minutes with no trade. You've got to know that that's what's going to happen in this market. Provide a unique trading environment in a live trading room for new and experienced traders. You can always ask questions. If I don't answer the question immediately, I've also got a fellow moderator that helps us out. Just know that we are not ignoring you. We're probably in the middle of a trade or in the middle of an explanation. We'll take all the time in the world to make sure everybody gets their questions answered. Why do we do this? Right? If you got something that's so successful, why do you go out there and moderate? I certainly don't do it for the money in the room because I don't make that much. I make it on the trading itself. But we also do it because the team approach, traders helping traders, that's what speaks to me. I like that part, right? Also, educating traders about the market is rewarding. In other words, I think contribution is important no matter what we do in life to contribute back. And so to me, when I see the light bulb go off, that fires me up. We also, trading alone, I'm an extrovert by nature. Stick me behind a computer for 8 hours, I will go crazy. I can do it for 2 hours, which is all I trade, about 2 hours a day. And then we want to keep everything interesting and informative. Always learn from the questions being asked. Look, I've been doing this for over 30 years. Even when somebody asks a question, it makes me rethink it, and we're going to repeat things over and over again. You've got to ingrain it. Hey, at my age, at 56 years old, I forget what I walked into the other room for, right? So we can forget what was just said in a moderating room or in a trading room, or seeing a red dot and a red candle and a green dot and a green candle, right? So profit sharing means, when we're making some money, contribute back to society, whoever you want. To me, I like to use Russell Home for Atypical Children, Clean the World, which is fantastic. They take soap from the hotels and they distribute it to those people, families, and countries that don't have the ability to stay clean. I know it sounds strange. Wounded Warrior Project. Don't think too much about all the negative propaganda. Just go and research it yourself before you contribute any money to any of these organizations. So let's take this step by step. In other words, after you place a trade, have you ever felt like this? If you have, it's because you're uncertain about the trade entry. You don't have the confidence in your trading system, right? I mean, we've all felt like this. Even these days, I feel like this when I take a loss. I feel like this, right? But we want to minimize this type of anxiety, and we want to develop that positive results in our P&L. That's the more important, right? And you won't have these emotions. So they say it, trading emotion free is the best trader, but it's a virtual improbability to be able to do that. You can't leave your emotions at the door. They say that all the time. We just want to learn to have the indicators in front of us give us the confidence to continue and the discipline to continue. Why? We're told that approximately 90% of all traders consistently lose money. Why? We're trading against supercomputers, algorithms, big money, investors that have, they spend millions of dollars to get real close to the exchange just for the microsecond of being able to win. I know some of these people. I know some of these firms that do this. I don't need all that. I don't need that stress. The proverbial question is what? So how do we beat them? How do we win? How do we make any money? How do we become profitable? We need an edge, right? This is a niche, if you pronounce it properly, right? An edge, something that each one of those individual trading rooms out there has. When you find that niche, stay with it. We take advantage of the nuances within the market, and those are determined. I like to use indicators. Some people think indicators don't work. It may not work for them, and it may work for me. It may work for people in the room. It may not. You've got to accept that not every trading system is perfect, and not every room that you attend is what's going to fit within your, what fits your needs. So we need to do it consistent. When you find something that works, you do it consistently over and over again. It's a no-brainer, right? That's why there's so many trading rooms out there. So that's why we have TraderShark.com. That's why I created it. I spent $70,000 to $100,000, and I liked and didn't like a lot of things in these other rooms out there many, many years ago. So I want to show you the nuances within the market. If you watch and listen, you're not going to learn it in one day. It's not like learning a language. I mean, it's like learning a language. You're not going to walk into a classroom and have it all learned within one day. So repetition, repetition, repetition. And one of the things we use, you're going to think, oh, what, a clock? Yes, a clock. Time is one of the most important factors in determining the market movements. By studying past records of individual stocks or futures, you'll be able to prove to yourself that history does repeat itself, such as reversal zones. It's a zone. It's not a specific time frame, okay? So the relationship between time and price is consistent. What is this? Well, this is price action. What's a Globex? The Globex is the market that is trading overnight before you come to the US market, such as the European market, the Asian market, and they're the ones that are going to push our S&P E-mini futures, or the S&P. But the S&P is not called the S&P. It's called the Globex range overnight, and I look for this high and low. I don't know if you can see my cursor on the screen, but this high and low of the Globex is important to me because after the day starts in the US market, I want to see the spread of the opening range. If they're narrow, if you have a narrow Globex range and a narrow opening range, the market's going to tend to be choppy. Isn't it great to know that we already know that the first part of the day? May want to go golfing, may want to go shopping, may want to go do something else. And if you don't believe it, watch it for a few days and see if that's true. If we get a Globex range that's wide, and I'll be more specific in the Shark Den, come on over for the free trial on January 14th. If the Globex range is wide, you'll hear us announce it in the morning. Hey, the Globex range was, let's say, 14 points, but our opening range is only 5 points. Do you think that maybe we have the ability to spread another 9 points under that market? Perhaps, right? So if you take the high and low of the Globex range and you put that on this market here, you can see that this spread almost is to the distance of the breakout. Is this going to happen every time? No, but we're getting these little edges. We're kind of putting more feathers in our cap, if you will, before we place a trade. So we know the Globex range is wide, the opening range is narrow. We're going to have a breakout, a higher probability of a breakout. We just want to know that. Very simple, right? Master the basics and you will master the arts. Have you ever heard that before? What a novel idea that is. When you stop searching for indicators, you will know that you've made it. The thing I bump in with so many new traders is they continue to search for something different. I want to do something different. I like what you do, Brian, but I think I can add to it. I like what you do, Brian, but I think I can add to it and create, emphasize what you already got going. Hey, good luck. I wish you all the best, and come on in and share it with us if you like. But for the most part, I've got something that works, is consistent, well over 10 years in the making, and we're doing fine. Not every day is going to be a winner. Very seldom do I have drawdowns. Of course, the last free trial I had, major drawdown, probably the worst trading day I've had the entire year, happened right during my free trial. Doesn't happen that way. You can ask some of the Shark Den members. So breathe, relax, repetition, master the basics. Opening price, red dots, green dots, red candles, green candles. Opening price tends to be an area of interest, but what makes it more interesting is when we get a spread or a distance from that opening range, and we talk about that in the Shark Den. The Shark Den is the trading room, the live trading room. So we establish an opening range. In this situation, our opening range is 15 minutes. So from 9:30 to 9:45 in the morning, you'll find that this opening 15-minute range is what tends to be a choppy range. So I'm only going to go for maybe 2 or 4 ticks in this opening range. If I'm stuck inside the opening 15-minute range for the entire day, then you're not going to see me jumping for more than 4 ticks on my trade. And it may take off without me. I don't care. I want consistency. I want to be disciplined, and I want to do it over and over and over again. If you trade 2 contracts and you trade it successfully 2 times, you're already up 150 bucks. Now that may not be a lot to some people out there, but it depends on how many contracts you trade. Opening range is very important. What are these outer levels? I'm not going to tell you here, right? That's the gravy. I'm not going to give you the gravy while we're in a presentation, but I want you to see the white dotted line. That white dotted line is the opening price. If this is creating a type of wedge, do you think we have a potential for a breakout? Perhaps. Do you think that maybe one of these lines that are created in the Shark Den that we explain, that are in the trading manuals, that we talk about, do you think that maybe we took the time to create those for a reason? Yes. So eventually, these are longer-term targets. So a longer-term target to us is by 3 or 4 o'clock in the afternoon, where I'm talking Eastern time zones. Okay, Eastern time zones. So do you think that if this market is running sideways into a little bit of a wedge, I mean, most of us that have been trading for a little while, you know what a wedge is. You get a breakout. Do you think that maybe a breakout is important if our Globex range was really wide? We don't know what happened overseas in the Asian or the European markets. We don't know. But we do know the price spread. So when we see that in the morning, yeah, it's a bad idea. It's not a bad idea for us to look for the breakout of the opening 15-minute range for us to drop down to one of these key levels. In this situation, it hit both. Amazing, right? Market conditions. There's 4 possible answers. You've all heard this. Repetition is the mother of skill. Let's do it again. Trending up, trending down, not trending. Hello, there's nothing new about that. Consolidating or accumulating. We'll talk about that. They are different. They're not the same. And the other. We'll talk about the other here shortly too. Trending up. It bears repeating because people, even in this situation, people get this confused. Higher highs, higher lows. It's like an escalator or an elevator going up. On an uptrend, you draw the support line at the feet of the price action. Does that make sense? I can hear you nodding your head, yes. Okay, so a downtrend, lower highs and lower lows. We draw, make a note of this, we draw the trend line across the heads in an escalator. Going down, you draw the line across the heads. So it's very important to understand the difference between an uptrend and a downtrend. I know this is basic, but it's critical. It's critical to stay on the right side of the market. Now let's go ahead and add in the opening 15-minute range. We got an opening range. We know it's running sideways. Can we have little trends here along the feet? Yes. Can we have trends here along the heads to the downside? Yes. We're building, right? We're creating building blocks. We're formulating a plan on how we're going to place a trade and how we're going to scalp out of this market and make some money for the trading day, right? The other condition I told you about, because I know this sitting in the back of your mind, what is the other? Is higher highs, lower lows. This is called a megaphone pattern. A megaphone pattern. And I hate it because by the time you realize you got into a megaphone pattern, it's too late, right? So there are certain things to watch for, especially in the lower time frame charts. Higher highs, lower lows, megaphone pattern. It is also called a search and destroy algorithm. You'll hear me talk about that. You don't think that they create these things to take the money from the unknowing trader? You bet they do. It's called an inverted wedge or a broadening top. So what is that? It's the market. The reason I'm showing you about the megaphone pattern is that's one trade is virtually impossible to master. But once you're aware of it, you can look back and say, you know what? The market can stay irrational, creating the higher highs and the lower lows longer than we can stay solvent. That means we don't have enough money in our account to weather all those losses. John Maynard Keynes. How do we put it all together? There are pivot levels. There are Fibonacci levels. There are key number levels. I don't use any of these. There's consolidating numbers. I use more of that, consolidating numbers. Prior highs and prior lows. I'll tell you how that's a myth. I'll show you. Everybody goes, ooh, buy off the prior highs. Or if you're pulling back into that, buy off that. Be careful. You've got to have specific rules when to buy off of those or when to penetrate them. But we like to use shark bands. I manually calculate those. These days, you're manually calculating them? Yes. And we use consolidating numbers of multiple sources that I'm not going to tell you in this place or in the presentation. Shark bands, okay? Shark bands are going to be, you're going to see them here shortly, green resistance levels and red support level. I'm sorry, the opposite, green support levels and red resistance levels. So Jesse Livermore, he says, throughout all my years of investing, I found that the biggest money was never made in the buying or the selling, but it was made in the sitting or the waiting. We wait. We wait for a pullback. I'm a pullback trader. We have green dots. We have green candles. Well, how do we know when we buy and we're going to sell? What if we try to do a red dot and red candle sell here? Well, let's put this together. Here's our opening price. Doesn't matter what price range is. I mean, I know we're up around 3,200, 2,600. Doesn't matter. It's the same patterns. Patterns are over and over again. They repeat themselves. Opening price is support. Takes off. Do you think maybe I'm going to be looking long off of a support level? Absolutely. Well, there's my opening range. Now I've got more. I'm putting more information. This is kind of like when you're learning a language, right? You start to learn the numbers and you start to learn the alphabet and then you start to put them together in pronunciation, kind of like what we're doing in trading. We have an opening price. We have an opening range. We have breakouts. We have consolidations. We look for areas. Now we're going to have indicators that are going to kind of give us support as to when to take a trade. Ooh, the pretty colors have arrived. So these are called shark bands. Red is for resistance. Green is for support. Do you think that these things work? Like a charm, man. These are I refer to them as religious in nature, right? I very much rely on my shark bands in the morning, and that's why I manually calculate them. So do you think that if we get a breakout from this shark band here, just a little bit of a breakout, we've closed above the shark band, the pullback here gives me the opportunity to get into a long position. I've already got my green dot to support it. Green candle, go. Am I going to hold for the entire length? No. Some traders will. As you become an advanced trader, you can do that. Hold to the shark band. The shark bands tend to get reached consistently, right? Once we reach a resistance level, back to a support level, up to a resistance level, how do you hold on so long? Hey, I'm a scalper. I'll be back out. I'll get out of it and get back in. I'd rather do that. I'd rather pay twice the commissions than take a loss of 4 times that, right? Ooh, now these arrows don't show up. I obviously put them in there. But in this situation, if you're trading in the opening 15-minute range, you've got support that creates it. Look at this green dot down here, an extreme. You know, there's rules that go in with these entries and exits. There's an extreme. We work our way up. We're above the shark band. Pullback. Continuation. Continuation bumps our heads into resistance to shark band. Do you think I'm going to place a trade while I'm in that shark band? No. That's considered a choppy area, or an area that would cause increased heartburn, sweaty palms, increased heart rate, stuff like that. So I would be looking long. But after my shark band causes resistance, 1, 2, now I know we're going to be breaking out long. This could pose resistance again. But once I get that close above the shark band for a pullback, for continuation higher, I'm happy looking into a long position. I've already got a green dot to support it. Green dot, my entry is on the green candle close, maybe even right here at this particular green candle close right here, green dot, green candle close, go. I'm going to get more specific. It sounds like a lot of information. Just remember this. We have resistance levels. We have support levels. Our job, if you wish to accept it, is to go from one level to the next. When we do that, we're waiting for a pullback. So do you think, I can't tell if you can see my cursor or not, but we can see this pullback right here. I'm liking this for an entry. Go. And then we'll have 2, 4, 6, 8. The target levels are not the same every day. They're going to change. They're going to change based on an ATR, an average true range that we use. That average true range operates as a stop as well as a target level. And once you reach the ATR, I'm getting out. Okay? If you want to bring in a trail stop and let one run, you can do that once you've got profit into your account, not just black and white off the get-go. Don't do that. My strongest suggestion. Red dot, red candle. Well, when would I try to short? Am I going to try to short on my way up? No. Would I try to short here? Why not try to short here, Brian? If I did, I may have got my first target off and got a reduced risk stop. What about the second red candle with the red arrow? I like it better. So we're watching volatility. As the volatility is increasing, we may want to take that second cross short. I'm not certainly telling you every single thing because it's just way too much information to give you in a short period of time. We look for trend line crosses. Once we get the trend line cross, we get a red dot, red candle close, time to enter the position. I'm trying to get traders to enter positions unconsciously, right? You've heard conscious competence and unconscious competence and unconscious incompetence. Conscious competence means that we are entering a position just like that without thinking. We're trading it based on what we see. That's why what you'll see is what I have in my little, what do you call it? The saying that I use is trade what you see, not what you believe. If you trade with what you believe, you're trading with emotion. If you trade what you see, you're trading a disciplined approach of conscious competence. Talk about that more. I don't want to get too heavy on you. More green arrows, more green dots. Now this would be a tough one. This third green arrow from the right, I may not take this one. This would be questionable. We didn't quite reach the shark band, but I do see bullish divergence. Can you see this? Higher lows on momentum, lower lows on price action. This is momentum leads price. The tendency of momentum is to lead price. Remember that. Absolutely critical. If momentum sets up in bullish divergence, green dot, green candle, go. There's your trend lines. Looking for a trend line cross. Once we get a trend line cross, there are rules for entry. Go over that later. Go over that in the shark den. Ooh, more green colors, more indicators. You're driving us crazy, Brian. Hold on. How far do you think that is from the resistance level to the moving averages or whatever, where this is more specifically in the shark den? If you pull back and you break it, do you think maybe I'm looking short? It all depends whether I have a supporting indicator to get into that or not. How much money is enough money? How much do you need to make per day to make it a successful trading day? In this situation, we find that a retracement into our shaded support levels is a nice opportunity to get in. you get an extreme pullback, green dot, green candle, go. Hopefully, again, we've tried to take a complicated setup, and put it into simplified terms, green dot, green candle, go. It's a little more, got a little more information than that. Well, now we've got it all on the screen, way too much on the screen. What are you doing to us here, Brian? This is a higher time frame chart. So whether you're trading stocks, options, futures, whatever, I highly suggest, and I would say most professionals do this, you're going to use a higher time frame chart and a lower time frame chart. We want to stay in the direction of our higher time frame chart. I don't care if it's a 4-hour chart and a 1-hour chart, which we would trade maybe in the Forex. I don't care if you're doing a daily and an hourly. It's irrelevant to me. But make sure you are in the direction of your higher time frame chart. If you focus only on your lower time frame chart, the tendency would be whipsaw or to get chopped out. Okay. Once we get a breakout, I want you to see, again, green dot, green candle, go. We have a red dot, red candle. Now here, it looks like, would I be trying to take a short? If I did it follow through shortly thereafter? It all depends on the time frame of this chart, doesn't it? Repetition is the mother of skill. Tony Robbins, one of the world's greatest life coaches, right? So, what do we have? I want you to notice the extreme down here in the lower left-hand corner. You see this extreme? The market is cyclical, however you want to pronounce it. Green dot, green candle, nice opportunity. What I prefer to have is for us to get a green dot, green candle off of a shark band. Not that difficult. Shark band's green, green dot, green candle, I like it. What about up here? Ooh, what about if we short off of this blue shark band, right? Some of us learn by listening, some of us learn by reading, some of us learn by watching, some of us learn by being told what to do. We need a combination of all three slowly as we get it together. Am I going to try to short in here? I don't have a red dot. I'm up against resistance. It penetrates the shark band, goes up into the next resistance level. Now, here's where patience comes in. We talk about patience. The money is made in the waiting. If you blindly sell here, you may make it, you may get run over. If you wait for a red dot, red candle, look at, we got a red dot here, got a red candle. What if we wait for the second cross? This particular situation, the candle didn't close below the shark band. Over here it did. So this supports a retracement or a pullback prior to continuing higher. I'm not going to tell you what this is. You'll find out on Tuesday when you come join us for the free trial, right? Opening price. Do you think opening price poses support? Yes, only under certain conditions. Only under certain conditions. If you don't meet those conditions, watch for opening price to get penetrated, cut it through like butter, and if you know that condition, you can take advantage of it in a trade. Do we lose 4 ticks? Do we lose 8? We lose 16 ticks. Can we lose $200 in one trade with 2 contracts? You bet we can. Can we lose more than that? You bet you can. You got to be told that you can lose just as much money as you can make. The idea is to get a trading methodology under your belt, learn it, master it, and then your consistency tends to be more towards the profitable side. You want to have obviously 60 to 70% more of your profitable trades winning rather than losing trades, right? Only makes sense. So these support and resistance levels are going to come in 2 and 4, but you're only going for 4 ticks. Hey, that's $75. If you trade, 3 or 4 of those trades a day, you could have $300 in 2 hours. Not too shabby. 7 ticks. What if you're only trading 1 contract and you run 7 ticks? Bring in your stop, play it safe. I like to trade a minimum of 2 contracts. It moves my stop a little quicker. There's a lot of different ways to play it. We've got a total of 9 different trade setups you can try. We concentrate based on 3 mostly. We have what are called shark attack trades. If you go back and look at some of my videos, you'll see shark attack trades when the market spikes and takes off against all those people that are shorting the market. There are conditions to watch for. Once you learn the conditions, it makes it easy. You don't just get into a car and drive. Somebody tells you take the keys out. Somebody tells you put the keys in, not these days. Somebody tells you to push the button. Your car starts. The steering wheel. I've got a presentation on direction directional indicators, and acceleration. It's like a car. Turn left, turn right. You don't know that until somebody tells you. Then you accelerate. Same thing in this situation. Trading is related to driving a car. You have to learn how to do it. Once you do, practice, 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 and then it becomes easier, and you do what's called conscious competence. You get into a car, you don't even think about it now. You get into a car, you push the button, or you put a key in, whatever age your car is, and you continue in that direction. You drive to the store and back, and you don't even know how you did it. That's the way I want trading to be. When you first learn it, it's called conscious incompetence. You're learning something. You're not sure. You pull in your emotions. Conscious incompetence. Eventually, conscious competence is our objective. Where did that blue rectangle come from? I drew it in there. Do we have support? Yes. Did that meet the conditions? Yes. Did we jump in with a green dot, green candle, off of a key target level and push higher? Yes. The shark den. Let's talk about that. We have a free trial coming up on Tuesday, January 14th from 9:30 to 11:30. You're welcome to stay the whole day. You can talk to other fellow traders. You can put your comments and questions in there. I will not, on the free trial day, I will not answer questions about the indicator settings. I just will not. I'm not going to I don't want the world to know that unless you come join us, okay? If you have any questions, you can email me, Brian@tradershark.com. How do you get into this free trial? You go to tradershark.com, go to the sign up tab. And the first one will say your next exciting event, which you'll see Trader Talk Live today. Scroll to the bottom and you're going to see the free trial. You can also go to the Learning Center and go to the videos. Okay. We also have a discount today. Again, I'm not a big salesperson. You know, I've had just unbelievable amounts of comments. Read the testimonials about the manuals. I painstakingly took it from somebody who knows nothing to more advanced traders. There's 3 manuals there. I think you get 25% off if you take the webinar special. If you use the code WEB, W-E-B, the gentleman who is the moderator in front of me, if you want to post that link, actually, you know what? Oh, right here. I put it up there myself. I forgot. I did this before today's presentation. www.tradershark.com/home/webinar specials. You can also go to the products tab and go right there, just directly under the products tab, you'll say webinar specials. Okay? Oops. Oh, you know what? You just jumped over into my screen. Okay. So you're going to use the coupon code WEB. The coupon code WEB if you subscribe to that. If you have any questions, please feel free to type them in. I know I tried to move very fast there towards the end. I know I have a few minutes left. Just remember this, trading is not easy. It takes time, it takes intensity for you to put the time in, just like doing anything. You don't go to learn how to do a pizza within one day. Somebody tells you how to do it, then you can go off and do it on your own. I'm here to really try to help people learn how to do it on their own. Check us out. If you have any questions, be happy to answer them. I also be happy, I can't do a Skype call with everybody, but if you're apprehensive or you have some specific questions, please feel free to you can Skype me. You can also go over to the on the home tab. You can also join us on Facebook, Twitter, LinkedIn. I try to get those videos out. I did recently move, so my apologies for any delays in getting responses. I have been on the road for the last 4 days. I just relocated from Orlando up to Chattanooga, Tennessee, of all places. So if anybody here is in Chattanooga, let me know. Be happy to meet with you. And that's it. See if any questions. Is my moderator still there?
Yes, I am.
Excellent. I got a little tab here. I can push down on questions, and I can see it. I can't see the full question. I just see part of it. Did I answer everybody's question?
I believe you have 2 questions from. Okay, you have 1 question that just came in. You should see that.
I can't see it. I can only see like one line of it. Maybe I'm.
Probably if you expand the window, you should see it.
Really easy. Okay.
Okay.
Gotcha. Okay. So let's see. Why the blue band? The blue band is generally pretty close to opening price. It kind of gives you a reference. Like if the market's taking off a bullish run long, it gives us a point of reference when we look up onto the screen, right? We want to kind of, I don't want to say minimize the thinking, but the blue band is a reference point. It's basically the center. You'll notice there's a total of 9 shark bands. Am I looking at wicks or candlesticks? I am looking at, we created the candles ourselves. It also has, you'll see yellow candles on our charts. We'll see green, red, and yellow. Yellow is more of a cautionary. The special's on until the 15th. I'm sorry, the 14th, the day of the free trial. It'll be at midnight on the 14th. Discount or before? Is 139 after discount? That's after the discount, 139. It's usually 198. We ask for the manuals, and I think the monthly subscriptions, 189 also, or 199, something like that. 199 a month, but I think we got a special on there at 25% discount on all those. Yeah, of course. Can you join the free trial before we join using the special? Absolutely. That's why I have the free trial. That's why I have the special going on until midnight that night. I think everybody, you should all see somebody live and in action before you purchase any of their products. Absolutely. How do you calculate support and resistance level? I can't tell you that, John. It's a great question, but I'm not going to tell you how I calculate them. Actually, I'll tell you what I do. I actually have an Excel spreadsheet, and I have multiple numbers from multiple sources, and I put them in there. I don't use anybody else. I use my own, only my own. And then I put them in categories, and as wherever they're consolidating, I will use that as a support or resistance level. Okay. Got your answers there. Do I trade pre-market? You know, there's only one trade that I will trade pre-market. And ask me, come join us on the free trial, ask me. I don't usually. As a rule, I try not to, right? We want to trade when volume's trading, but there is one trade that I will trade in pre-market, yeah. That's a good question on the special on the indicators. I'll have to check with my partner. I don't, you know what? I think that special will take 25% off everything. Try it. You don't have to close. You don't have to press buy, but try it. I think you can use that on everything out there. How many ticks do you take out every day, 1 car basis? Generally, let's go ahead and use 2 cars. A car is a contract or a. For those of you that don't know what a car is, we use it as 1 contract. I tried 2 cars. Is there an average? I mean, you know, some days we'll take losses, some days we take gains. We can range anywhere from 0 to upwards of. It's not uncommon to run 23 ticks, 24 ticks, but average, I would say plan on, you know, 3 to 8 ticks. You know, because there's different mentality of different traders. Some are conservative, some are aggressive. If you just go pure conservative nature, you're not going to trade in the opening 15-minute range. You're only going to take a breakout once you get out of the 15-minute range. You're going to go for a 2-tick and 4-tick target. There's $75 on 6 ticks. High probability trade, right? You got to plan for losses as well. The manuals are awesome. I mean, not just because I wrote them, but I took 4 months, and they will guide you as to what type of trader you are. I can't get inside your head as to what kind of trader you are. You may have something that already works, and you may want to take what I do and add that to your current trading methodology, you know? Does that answer your question? Yeah. And you know, have I had losing days? Absolutely. Not very often. Have I had full stop outs? Full stop out would be like 16 ticks. Yes. Is it painful? Yes. I hate it just like anybody else. Have I had 2 stop outs in a row? You know, the last time I had 2 full stop outs in a row, I think it was actually during the free trial. Absolutely. Yeah. But it doesn't happen very often. And we're currently trying to, you know, that's a great question. I initially had traded crude and the euro and gold. I backed off trading the euro. It got a little bit squirrely after they split that in half. Gold got kind of volatile and then got kind of sleepy. I like to watch crude. I've got some great traders in there that trade crude, but all in all, I'm going to say the answer is no. We trade the S&P E-mini futures, but I do want to incorporate a little bit more of the crude and potentially the gold trading into the future, because when that S&P runs sideways flat, we need to have another volatile market to be able to jump into. Is that fair? Okay. They don't. They don't work on Sienna charts, but Sierra charts, I think you meant to say. Sierra, right? Sierra charts is awesome. We have indicator packages for NinjaTrader and TradeStation. But, oh, you know what? I apologize. They do work on Sierra charts, but you would have to manually calculate them based on what we present in the trading manuals, okay? Because since they are common indicators, you will take that information that's in the manuals and you can apply that to any other software, okay? Estimated win-loss ratio, expected return per trade, rate of gain return. Come on into the Shark Den and watch, because it's going to be different for everybody. I trade both aggressive and conservative. I have 3 different trading platforms I use. So I'd suggest, come on over and watch, and then you'll get an idea of how your win-loss ratio is. We can range anywhere from hitting, let's say 66% of the time and still be successful, up to as much as 82% successful trades. Win-loss ratio, it's a generic question, because we trade so many different trades. We'll trade a 2-tick and 4-tick target. We may trade a shark attack target. We may trade a wave trade. We may trade an extended wave trade. All of these are terms you got to get used to in the room. So I can't really just basically say what the win-loss ratio is or the gain-loss per trade, because there are so many nuances that occur. And then when the algorithms that the professionals are using, those will change on a daily basis as well. So anyways, I hope that answers your questions. Come join us on the free trial. That's really the only way. You got to get your feet wet. Check it out. Not about the sales. I'm more about trading. I make my money trading. Okay. I hope that answers everybody's questions. Have a great remaining part of the day, and I look forward to seeing you on Tuesday. Thank you, Traders Talk Live, for inviting me, and I look forward to the next presentation.